If you want to start investing, but you're just unsure if it makes sense right now, as a lot of stocks are at the all-time highs. And if you have questions like, is this right time to go into the market or should I wait until the crash? In this video, I will ease your mind and address your worries because I'll show you one powerful tool that will put everything that's going on in the stock market into perspective. When I heard about this tool, it was a mind-blowing moment for me, and somehow for me, it calmed my stock market anxieties. Hello finance people, my name is Robert and I'm here to share my learnings and experience about personal finance as a European. So let me ask you a question. If you look at this graph, would you buy the stock? This is about 10-year time frame, and you can see it's gone from about 78 to 300. That's about 380% increase. So would you buy it or wait for it to come down? Now, just by looking at this graph, you will probably say, just wait. It's at its highest peak and it's just not sustainable growth. It must crash at some point. What about now? Would you invest into it now? So you already missed out on quite the rise here. Would you invest now? And now? You kind of missed out the whole ride. I mean, we started somewhere here and it has at least tripled from there. This growth is pretty crazy. It looks like it's completely unsustainable. So let me show you. This is actually S&P 500 graph. And you can see that we started like in the 90s. We went from, what is this, like 300, and now we're at 4,200 or 300. Just insane growth, right? It looks insane here. But here's the trick. Now, pretty much any graph that is connected to finance has this, but they're usually hidden in settings. So if you go to settings, from here you can choose logarithmic. Now you can actually see, wait a minute, the growth has been quite steady for last, basically from the 50s. So the unsustainable growth, it just looks in the graph because this graph is logarithmic, and the one that by default is linear. So let me quickly explain linear versus logarithmic charts like this. So we have the data here, we have the year and the stock price. We have the linear graph and logarithmic. Where you need to pay attention is the y-axis, so the vertical axis. You'll notice here in linear, we go from 0 to 1,000, 2,000, 3,000, and so on. So it's a unit of 1,000. We go always up by 1,000. So from here, you notice that the graph looks like it's exponential growth. The graph just gets steeper and steeper every year. So it looks like, okay, we're doing better and better in terms of growth. But in reality, what we've done, we actually just double every year. So we doubled here, and here. And so this distance, this steep curve, is exactly the same as from here. So from 100 to 200. And this creates a bit of a problem for us if we look at the graphs with a lot of data that extends over many years. And, the value between the, first years and the last years is big. It causes issues because we cannot see how much we grew before because the units were so small. So from 100 to 100, you barely see any growth here. But actually, at the time, it was as significant as from here to here. Then we look at logarithmic chart here. We notice that we go from 100, 200, 400, and so on. It is not as consistent as here. So it's not always unit of 1,000. And that's because we use percentages here. So it's a percentage change. From here to here, it is 100% change. Here is also 100% change. And that's why the line is consistent. And it's same length and same steepness. And this really helps us when we look at charts that are in a long time period because the logarithmic will kind of smoothen out the differences in the units. And just as a summary, in linear charts, the distance is always consistent. It's always the same. Let's say it's a unit of 1,000. So that's why you see it like this. Whereas in logarithmic, it's used in percentages. So then you'll be able to see better the growth or decline of a stock. The problem with linear is that, let's say it doubled from here to here. Okay, fine. But if you double from 3,000 to 6,000, you actually occupy 2 squares like this one here. And this one occupies only 1. So you don't actually see in this graph that it doubled. When you look at linear graphs, you'll notice that here we don't even know how much. It looks like it's insignificant results here, how much it rose here. But actually, it might have doubled here, and we wouldn't even see it because it's so small. It occupies very small area just because it needs to show the same distance for every 1,000 euros or dollars. This is the problem with linear graphs. Whereas with logarithmic, if you come here, they actually show you see here on the right-hand side, it went from 140. 140 looks this much. This is quite a lot, right? So from 140 to double, that's 240. So it will be somewhere here. From 240, if we go double, that's 400. What is that? 480. So 480 would be here. So you can see that it gets squashed the closer it gets to the top, because then the differences are the same. So it's not because of the graph that it looks like exponential growth. It's because it's actually happened exponential growth. So for example, here, these from 95 until the dot-com bubble, yes, that was exceptional growth. You can see that it went much steeper slope here than, for example, the earlier times. But if you compare this slope to this slope, actually it's not that bad. So we're actually growing around the same pace as always before. To me, this is just so powerful because I can see that actually we're not at all-time high, or no, we are at all-time high, but this amount of growth is not unsustainable because we've been doing that for the last 70 years. Now, does it mean it will continue? I don't know, but I just want to show you that there's other ways to look at these graphs. This just helps you to put things into perspective. If the stock that you're looking at, if it's growing at a crazy pace, this one will just give it a bit more clarity. So earlier I mentioned that using a logarithmic graph reduces my anxiety about my choices in finance. But there's something else I've started doing recently that's had even bigger impact on my peace of mind. So check out this video right here where I'll show you what it is and how you can use it to make your money work for you without even thinking about it.